welcome to Indianomics. Last Tuesday night, the Prime Minister jolted the economy, the banking system and the common citizen by saying that all 500 rupee and 1000 rupee notes ceased to be legal tender. In one stroke, hoarded cash became useless unless one could explain the source of the money. Even as citizens grapple to exchange their 500 rupee notes for petty cash, the nation is faced with not petty but some very large questions. One, how much is the size of India's black money? How much of the 500 and 1000 rupee notes will not be returned at all because it is tax evaded money? Three, if citizens simply destroy the cash, which they cannot explain, will it reduce RBI's liabilities? Is this lower liability a windfall gain? Larger questions, will this move permanently change the behavior of tax evaders? Is this swelling of deposits a blessing or a bane for banks? To answer these questions, I have with me an elite panel: Deepali, Bhargava, the economist from Credit Suisse; Sonal Varma, the economist from Nomura; and by far India's greatest central banker, I would think, Dr. C. Rangarajan, joining us in just a bit. Ladies first, welcome to the show. Well, Deepali, what are the estimates Credit Suisse is working with in terms of how much of the 15 trillion value of 1000 and 500 rupee notes will not come back to the system?
Hi, Latha. Latha, I think historically it does suggest that some parts of the currency gets permanently immobilized as a result of demonetization. So there was, historically, there was an episode which happened in 1978, and the impact on wealth destruction then was pretty limited because the currency amount that we were talking about then was pretty limited. So it was about 0.2% of GDP, and this time we're talking about pretty big magnitude. So we're talking about close to 10.5% of GDP worth of a currency. Last time, almost 85% of the currency actually did not come back to the system in terms of, exchanging it with the new currency. So if you were to work by these numbers, I think wealth destruction could be pretty meaningful this time. But I think the question we're trying to essentially answer is if it's really wealth destruction or wealth transfer. And I think the answer really lies in terms of how this gets treated on the RBI balance sheet.
Well, Deepali, actually you raise a point which a lot of experts are raising. The Reserve Bank's liabilities, will they go down, and how will it account for it? And I think we have the best central banker that India has produced, Dr. Rangarajan, to answer that question. So, the Reserve Bank's balance sheet says in FY16 that it has 17 trillion rupees. That is the notes it is issued. That is its liability. If citizens destroy about 2 or 3 trillion rupees, then the liability goes down. Will that be accounted for as an increase in reserves of the Reserve Bank, and will it therefore be able to declare some dividend to the government, a special big dividend?
To me, this is a liability which is getting extinguished. Therefore, on the liability side of the issue department, it is coming down. And therefore, what will happen is some amount on the asset side or equivalent amount on the asset side will have to come down. Therefore, this is basically a balance sheet problem, and it is not a profit in any sense of the term. So the reduction in the liability side will be matched by the reduction in the asset side.
Okay. There is no question, therefore, of the Reserve Bank being able to declare any special dividend. Separately, sir, Article 47 of the RBI Act says that surplus after meeting current expenses can be transferred. It doesn't seem to allow the Reserve Bank to touch reserves. Any comments on that?
Well, the interpretation is correct. I mean, I think the profits that are made by the Reserve Bank are essentially out of the current transactions. Actually, there is no capital gain or capital loss as far as the Reserve Bank of India is concerned. Therefore, I would really say that there is no scope for any extra dividend to be declared to the government. Okay. Basically, it is a simple adjustment on the balance sheet.
Okay. Well, assuming that the Reserve Bank Act is amended to make the Reserve Bank pay something which is interpreted as a reduction in liabilities and therefore as a accretion to reserves of the central bank, how can the Reserve Bank transfer something as large as 1 or 2 trillion rupees? What could be the modus operandi? How would the transaction itself happen, sir?
I really have to think through, but I don't see it as a profit, and therefore I don't think that it will work that way. Okay. As you say, there's a huge amount, but we do not know how much will be extinguished, because it all depends upon how much money is not coming back in that sense of the term. But therefore we'll have to wait and see. Okay. That will take almost another 6 months to find out.
Yes, we will not know till the RBI balance sheet is printed, of course. In any case, as you say, legally and by accounting standards of the central bank, there should be no such windfall gain that the central bank can account for or pass on to the government. So we will take that as a given, since it comes from the best central banker of our times. But Dr. Rangarajan, to take the argument forward in terms of impact on the economy, immediately when a large amount of what is maybe largely hoarded cash goes out of the system, what do you think is the impact on inflation? Do you see a big deflationary impact?
Not necessarily. You see, it all depends upon how and in what manner it was kept. Basically, this decision of the government really immobilizes a part of the unaccounted money kept in the form of currency. In a sense that if it had been kept idle in the lockers of the people who have not accounted for the income or the money, and it just now gets extinguished. Therefore, to that extent, if it had been immobile before, it will also be immobile now. I mean, I think that's the situation. But to the extent to which this unaccounted income was circulating in the system, perhaps what will happen is that the difficulty in using this money, this unaccounted income which has been demonetized, to that extent it almost amounts to a reduction in money supply, and whatever impact that a lower rate of growth in money supply will have on inflation, that effect will come. Therefore, we have to wait and see how much of it is really does not come into the hands of the Reserve Bank.
Okay, let me ask Deepali if they are working with any sectors or numbers on this issue. It's well known that the real estate sector works with a lot of unaccounted money or unbanked money. Because of the real estate sector, sectors allied to it like cement could be impacted. Actually, the stock market is driving down even stocks like paint companies, on the assumption that a lot of people who indulge in such discretionary consumption could be doing it with untaxed or tax evaded money. Deepali, what is your sense in terms of impact on growth?
Right. I think the best way to look at it is to look at it, I mean, obviously in the near term what happens, and certain sectors get impacted in the near term. And what happens in the near term, so initial stage may be more like a supply side disruption, so like a natural disaster when transactions and activities get disrupted initially, but then eventually people find their way around it and activities rebound, but perhaps there is a new lower normal and it doesn't rebound to the level that was there earlier, and some wealth does get destroyed permanently. So initially I think short-term disruptions will impact your sectors which have a very heavy supply side, cash-driven supply side chains, for example your consumer sectors, your auto sectors, etc. But there could be more permanent disruption in the sectors that you mentioned earlier, so which is your real estate, cement and jewelry as well, where your black money is likely to be more active. So barring the first round impact, I think the longer term impact will be more sector specific rather than be felt on the economy as a whole.
Sonal, what do you assess as impact on growth and inflation?
Well, as far as growth is concerned, I think it's clearly short-term negative, but I think over a period of time things should normalize. This is more of a transitory shock. One aspect. So there are two things here. One is the short-term cash shortage, which everyone's going to face, and that's going to reduce the transaction volumes in general. Discretionary consumption is going to get postponed. Sectors which work with more cash, constructions, the small and medium-sized sectors, two-wheeler purchases, second-hand commercial vehicle purchases, they clearly get impacted. And I think it's going to take at least 2-3 months for things to start to relatively get back to normal, and what it implies therefore is a shock to the economy, and our assessment is that this shock could mean that growth in the December quarter. Nomura's projection right now is that growth will be about 7.3% in the December quarter, but we see a risk that it could actually be closer to 6.5%. Some of the shock could spill over into the March quarter as well. So we have a 7.9 forecast, which could come down closer to 7.5%. But beyond that, I think one very positive aspect, and I think the biggest positive from all of this is to the banking sector. The cash in circulation is going to come down. There will be significant deposit accretion for the banks. Our estimate is close to 4.5 trillion INR. And given credit demand is weak, there will be a substantial deployment of this incremental deposit into government securities. So the issue of transmission we've had so far in terms of banks not lowering deposit lending rates, I think this scheme is going to give a big push to transmission. Interest rates should come down, whether or not the Reserve Bank changes. And that is going to be a big positive for the rest of the economy. And over time, as tax compliance increases, government gets more revenue, there will be scope for public capex as well. So our view is this is more a transitory shock restricted to the next 3 to 6 months, beyond which we expect things to more or less stabilize over a period of time. On inflation, more neutral in the short term because, it's going to impact. The cash shortage might have some impact, but the kind of, conspicuous consumption demand it's hitting, real estate, gold, these don't really have a big weight in the CPI basket. And even housing is rental, it's not the value of housing. Plus, if part of the informal economy, the shadow economy actually becomes part of the formal economy, so they have to pay taxes, then they might actually pass on some of the taxes as well to consumers. Yeah. So near term, we think it's more. Over a period of time, it's definitely disinflation.
You've raised a lot of issues, Sonal. Well, we have to take a break, but there are several positives in terms of whether it can permanently change the amount of business that will go through the banking system and therefore the amount of taxes that will come to the government. We are back in a minute with our experts.